In this video, we are going to be backtesting gold over the 2025 price action. We're going to be testing the same strategy which we've recently used on the channel to test gold over the 2024 price action, which got us these results. Over the course of 1 year's worth of data, we had a 66% win rate across 107 total trades, a very nice equity curve, and this was all done using a mechanical 1-to-3 risk reward system. So in today's video, we're going to be testing this same strategy but over the 2025 price action. For anybody that's new to the channel, I'm also going to be doing an in-depth walkthrough of the exact trading plan first of all, and the trading plan document is also going to be available for free in the description below for you guys to download as well. So the plan for the video is like this. We are going to first of all walk through the trading plan for anybody new. We'll then get into around 40 minutes or so worth of gold backtesting to show you guys some examples of how this strategy works. And then finally, we're going to go and review some of the analytics we've had so far. So let's not waste any more time. Let's head right over to the charts and let's get straight into the backtesting. Right guys, so as I said, we'll go through the trading plan document first of all for anybody new to the channel. If you've already seen this trading plan walkthrough and you want to skip ahead straight to the backtesting, I'll put the chapters at the bottom of the screen. This trading plan will also be downloadable completely for free in the description below if you guys want to check that out. So getting right into things, starting off with step one is, as always, when we go over to the charts, we're looking to identify higher time frame market structure and direction in order to gauge whether price is bullish or bearish, right? If price is bullish, I'm only looking to buy. If price is bearish, I'm only looking to sell, because these are going to be the higher probability trade setups which allow us to capitalize on the market moves and have a higher probability of winning trades consistently, right? So to do this, I'm going over to the daily and 4-hour charts just to see that overall macro trend direction. And one thing I'm always doing when I come over to the charts is, instead of just visually seeing that price is bullish or bearish, I actually want to mark on the current and significant structure points. So for example, here you can see I've marked on, I use the notation B and C. B is just to break a structure, C is a change of character, but essentially I'm just marking this onto the charts so I can see what the structure looks like, and this is going to make it a lot easier for us when we come over to the next steps in this trading plan, right? Once I've identified structure and direction on daily and 4-hour, I then want to break it down to the hourly time frame just to see any of the more kind of refined structure and internal structure. And I've also included here that I draw on previous mitigations. What I mean by that is, if we go down to this image, a previous mitigation is an area where price has tapped into to the past and rejected from. So here, for example, you can see price came up, rejected from the supply and pushed away. So this, to me, would be classified as a previous mitigations. And all that simply means is a kind of fancy term for the fact that price reacted from supply and pushed away, or reacted from this particular area and pushed away. That's all I'm doing in step one. I'm basically marking on structure on higher time frame, working our way down to the hourly time frame to see some of the more internal structure, and also marking on the key structure points and where price has reacted from previously, right? Moving over to step two. This is where we're actually going to identify points of interest, which are areas where we're looking to buy or sell from after price has retraced into them, right? And again, I want to re-emphasize this. If price is bullish, we're only looking to buy from a point of interest. And if price is bearish, we're only looking to sell from a point of interest. And we're never looking to trade counter to this trend. So for example, if price is bearish here, I'm not looking to the left for an area to buy from. I'm simply waiting for a retracement to capitalize on pro-trend continuation plays after price has tapped into a point of interest. Now, what actually is a point of interest? For myself, I have one main type of point of interest, which is very simply an area of higher time frame supply or demand within the current trend leg. So for example here, this is also why it was important to mark on the breaks of structure in step one. We identify the break of structure, right? We then look between the high and the low, so within that current trend leg, for an area of supply that we're going to sell from. And to validate an area of supply, I need to see three main things. The first one, it needs to create imbalance. Secondly, we need to see some liquidity resting below it. So here, for example, you can see that price created this imbalance from this area of supply. This tells us that this is an area where volume came into the market in the past, and therefore once price comes back into it, it's likely that price reacts from it again, because people were willing to sell from this level in the past. That's kind of showing, that's what the imbalance is showing us, right? That a lot of people were willing to sell from this level. So when price comes back up into it, the theory is that they will also be willing to sell price at this level again. We also need to see some liquidity taken out into this point of interest, which basically means, for anybody unfamiliar with this concept, we need to see previous highs taken out into that area of supply, right? And what this is basically going to mean is that we don't always have to be right about market direction, because we know that once liquidity is taken out, there's a high probability that price pushes away from this area. So even if we don't see a complete sell-off, we might still get a small reaction, which when we're going over to the lower time frames to enter in step 3, allows us to still capitalize and profit from that move, even if we were wrong about market direction. More of that when we get to the backtesting itself, that'll become a little bit more clear. And the third criteria is very simply that this area needs to be within the current bearish leg. So for example, I'm not looking all the way up here to the left for a point of interest. I'm looking within the current bearish leg, which again is why it was very important in step 1 to identify and draw on the breaks of structure or changes of character, right? Now, moving over to step 3, this is when kind of logic comes into play, because we don't want to just obviously randomly sell from an area of supply every time we see one, because areas of supply and demand occur all over the place in the market, right? The key is to know with a high likelihood which ones are going to hold. That's partly why we have these these criteria in place, right? The imbalance, the liquidity, and the fact that it's within the bearish leg. That increases the chance that price reacts from the area of supply, but we still need to wait for price to actually show us that it wants to react from this area. And this is one of the things that I like to emphasize to the guys inside VIP, and it's kind of like a personal mantra that I have, which is react to price, don't try to predict where it's going to go. And the way we react to price and know whether it's going to hold this area or not is, if we look at step 3, utilizing lower time frames to enter the trade. And I've made this as mechanical as possible. So on every single trade, I'm going over to the M5 chart for my entries. It's always on the M5 chart. I never use any other time frames for entries, and this just helps to make it as kind of rinse and repeatable as possible, right? Every single trade we're doing the same thing. All we're doing on the M5 chart is, let's imagine we're in this bearish scenario. When price comes up into this POI, this blue box right here, it's going to look like a bullish market structure on the M5 time frame, right? As price retraces back up. All we're simply waiting for here is for price to shift bearish by breaking the most recent higher low. So for anybody familiar with the concept, this is simply just a change of character on the M5 time frame. Once we see that M5 change of character, we're then looking for an area of imbalance. We're entering on the imbalance with stops above the high, and we are going to mechanically target, if we go over to step 4, a 1-to-3 risk to reward ratio per trade. This is, by the way, a massive game changer, and it has been a massive game changer for myself, which is to mechanically target a 1-to-3 risk to reward ratio. I tried all sorts of different risk to rewards, but 1-to-3 always came out on top. And also, significantly, I don't make my trades break even, and I don't take any partials, because again, after countless years worth of testing, this was the approach that produced the most profit over a large sample, right? 1-to-3 risk to reward, no break even, no partials, simply hold into stop loss or take profit. So for example here, we have an example of an entry model. We have price creating a change of character. We then have this area of imbalance. We're entering on that area of imbalance. Stops just above the high to allow the trade a little bit of breathing room to play out, and mechanical 1-to-3 TP. All we need to know for risk management in this backtesting session is that we're doing 1% risk per trade, and also significantly, the risk is staying the same no matter how I feel about the trades. This is also a significant point I want to emphasize as well. A lot of the times traders are tempted when they're more confident in the trade to risk more, and when they're less confident in the trade to risk less, but that is, to myself, nonsensical. It doesn't really make sense, because the trades that you're more confident in may be the ones that lose, and the trades that you are less confident in may be the ones that win, right? So you put yourself at a statistical disadvantage if you change the risks depending on how you feel about trade. So I always keep the risk the same. It's always 1%, and as I said, we're not making break even, and we are not taking partials. We are using a mechanical 1-to-3 TP. I've also included a few more kind of nuanced details about some of the trade journaling and key processes I do as well as how I manage prop firm accounts and different size prop firm accounts here as well. that's besides the point for this video. So as I said, I'll leave this trading plan for free in the description below for you guys to download and go through in more detail in your own time. But now that we've gone through this, let's head over to the charts and this is going to really help to clarify and make things more concrete for you guys as well if you're a little bit confused at the moment. So let's head over to the charts and let's jump into the back testing. Alright guys, so starting off from where we left off last time, and as always starting off on higher time frame and working our way down. Here we can see that at the time, price was very clearly trading at all-time highs. It was very parabolically bullish. In a scenario like this, obviously we are not looking to sell. It doesn't really make any sense, right? We're looking to follow this trend after a retracement. So if we just mark on the current structure, we've had this being our most recent daily bullish leg. As always, marking on the structure just to make that a little bit clearer for us to see. Now, if we jump over to 4-hour chart, we can also see that price did a retracement here and then broke structure again. So I would consider this to be kind of like the current bullish trend leg. Where did the volume come in from? The volume came in from this area of demand right here at the origin of the move. So this is the first point of interest I would look at. If we jump over to hourly as well, it's probably a bit clearer to see. Yeah, so it's kind of like this whole region. I wouldn't over refine this. I would just see how price reacts to this area. Above that area, we also have this hourly one. I would consider buying from this if price presented a nice entry, but yeah, I would say this one's lower probability because there's no kind of, it was already mitigated, right? This is efficient price action. There's no imbalance here. So let's see if price retraces. Obviously, gold being gold, sometimes in these sort of market conditions, it's very difficult to trade, just simply because of the fact that when it's parabolic like this, it has all of this momentum. It doesn't sometimes retrace, it just keeps going up. So sometimes you have to kind of look at the nearer term price action rather than, you know, like expecting price to come all the way down here. There's nothing valid for me here though, so I'm just gonna keep playing price on a bit. Right, there we go. So price has now retraced a bit more. The reason why I was hesitant to buy anywhere up here as well is just because you can see price was trading at a premium. There was not really any reason to to buy at this region. I'm also just going to mark on the sessions, one sec. Right, so now we have Asia session plotted. For anybody that doesn't know, I'm from the UK, so I don't trade the Asian session because it's overnight. And I think sometimes gold does present some nice moves in Asian session. So if you are in the correct time zone, it's definitely worth backtesting and seeing if Asia session is profitable for you. So as we can see here, price has come down into our area of demand. So here I'm looking for, as always, an M5 change of character in order to enter the trade. The thing about this though is that there's no M5 structure here unless price wants to come all the way up to this high. So what I would actually be looking for here would be maybe if price can re-grab the low, then give us a change of character like this. Until one of those two things happens though, there's no valid trade here, so I'm just going to play price on. Just kind of consolidating at the moment. So as I said, this was if price can break this high, this is the M5 change of character. The hourly structure and M5 structure are the same here. That's why I'm on the hourly. Right, so price has given us that change of character. Notice where it's retracing from to the left as well. This is one of the things I like to emphasize to the guys inside VIP, which is that you need to pay attention to where price retraces from. Because for example here, right, price is retracing before having swept the liquidity. So the chances are, instead of this being a complete reversal back to the lows, it's probably going to be a small correction for price to push back up into the highs, given that it hasn't swept any liquidity, right? So here we can look for a buying opportunity. This area of demand here that price has just tapped into stands out to me. I would want another confirmation here though. I wouldn't want to just set a limit on this area. So let's have a look. If we're on the lower time frames. Yeah, it looks like price just wants to tap and go. Yeah, there we go. So no entry there. That's annoying, but obviously that happens sometimes. You don't always get a confirmation. Sometimes price just taps and goes. So again, following the structure here, we've now had another breaker structure right here. So we can now look to follow, again, just this bullish structure. Definitely not looking for any sells anytime soon. So let's have a look. In terms of points of interest, what do we have? If we jump over to lower time frame, price, again, very difficult market conditions to trade, because in these circumstances, price typically just like rallies with no pullback. I would consider this zone if price pulls back into it. Actually, it has also in London come down, swept some lows, and tapped into this lower time frame POI. Again, though, there's no M5 structure here for it to give us a confirmation. So yeah, there you go. Price rallying again. No confirmation there, though. Yeah, this isn't really possible to trade with this system, because it's just rallying with no pullbacks. So if we just wait for a retracement here. Right, so we've had a retracement here, and a new breaker structure was created. If you guys look just here, so yeah, maybe I'm thinking maybe if we see a sweep of Asia low, that's within the current bullish leg from the low to the high, maybe we could see a buying opportunity after that. Yeah, so now I would want, just based on how this has come down, I would want at least this low to get taken out before looking for buys. You can see price has very clearly created those equal lows just up here. So I wouldn't buy above this. Okay, very weird price action here. Okay, so price has now come down. Again, because of how bullish this was on higher time frame, I think one of the mistakes a lot of people make is that they would view this prematurely as a change of character. So they would be viewing price like this. We might see a move lower now, but again, I would just consider this to be a retracement rather than a complete reversal. So for example, now that price has swept some of these lows, I would be looking out for some more continuations rather than seeing this as a change of character, if that makes sense. So let's have a look. And the key, the way you're going to know this, right, is if price does start to shift bullish. So like it has done here, we've seen that shift back bullish. We've got an area of imbalanced demand down here. So this is actually a valid trade for me. I'm going to set this limit. Let's see if the risk to reward is worth it. So if I enter here, the reason I'm entering here, by the way, is if you notice this wick, it's the last bit of liquidity before the imbalance. Rather than getting a really over-refined entry on the demand, I would rather just enter on this whole area rather than miss out on the trade completely. But I don't think in this case the risk to reward is going to be worth it. Ideally, I want to be out of this trade before this supply zone is hit. So what I'm actually going to do in this case is I am going to refine it to the demand itself, just here. And then, as always, we're doing a mechanical 1 to 3 risk to reward. So let's place this trade. Let's see how it goes. Yeah, so it doesn't look like it's pulling back. This is now invalid because price didn't pull back. At this point as well, this is also another tip. Don't stay married to seeing this trade play out, because now that price has pushed up and swept the opposing highs, if it comes all the way back down here, it's probably not going to hold, right? So I wouldn't be entering that trade anymore. Yeah, there you go. So that's exactly my point. Once it comes back down to that low, it's probably going to take the low rather than holding it. Again, still currently seeing this as a pullback, but now we can look for price to target the next liquidity level before buying again, which would be, if we have a look back on 4 hour. Actually, we have this area of demand. We also have this previous low. Either of these is a valid point of interest. If price can hold this demand, I would consider buying from it. So let's jump over to the M5 and let's see if this holds. Let's see, so it is currently holding. I still think it could be likely that we see a sweep of this though. Not really liking how it's come down with a lot of volume, and yeah, now we're getting this very corrective pullback. Yeah, there we go. So price is coming a little bit lower. Okay, so now that this higher time frame liquidity has been swept, right? The majority of people are still trying to sell, but because we're aware of this higher time frame narrative, right? Again, I'm not viewing this as a change of character just yet because of how bullish price was prior to this. If you look on weekly as well, like very clearly still in this bullish trend. So instead, I'm going to look for some more buying opportunities here. Even if this is also one of the things I like to emphasize as well, is that when we're using this liquidity approach, right, even if price is going to continue lower, because it's swept this liquidity, we may still see a bounce before price heads lower. So we can look to capitalize on this bounce, right? So if we jump over to M5, let's see if we can get an entry on this. Just going to fast forward the Asian session. Right, so Asian session has pushed up. We've created a change of character. In terms of entries, we just hop over to let's have a look. Right, so in terms of entries, we have, to be honest, in a case like this, I would rather see Asia low swept first. So I'm just gonna let this play out. If it comes down into this area of demand and presents another confirmation, I'll take the trade. But in a scenario like this, I would prefer to see Asia low taken out first. So let's see. Right, so now Asia low has been taken out. So let's have a look. This has been swept. Daily liquidity has still been swept to the left, as you guys can see, just here. So if it can start to shift bullish from here, I will consider the longs. Currently, I would need to see this high broken. Yep, there we go. And in this particular case, the entry is already valid. There's no reason to wait for a retracement. We can already get a decent risk to reward on this. This is also a mistake I see a lot of people making. They'll, for example, refine to this demand, but there's no reason to get that sniper of an entry or that precise of an entry when you could just enter here. Avoid missing the trade altogether. So we'll just do market execution on this one. And let me just mark this on as well. So this was the change of character, right? Price has created imbalance. This is a valid entry. So let's see how this plays out. Right, nice push so far. And yeah, let's see how this goes. Yeah, nice. So TP hit on that one. Again, like I said, paying attention to the liquidity levels allows us to capitalize on these moves because you know that there's a high likelihood that once this is swept, price bounces in the opposite direction. Right, so we are getting a retracement. This is the following day. Asia low has been taken out, right? Price has shifted back bullish on lower time frames, which was down here on the M5. So maybe we can see another entry here now that this Asia low has been swept. Currently no change of character here, so let's just keep playing price on. Maybe if this low can go and then price presents a change of character. Yep, there we go. Notice the volume coming in here as well. Very clear bullish volume and intent. This is the Asian session though, so I'm going to fast forward this. Yep, so Asia session heading over to the upside. Obviously there we couldn't have capitalized on that because we weren't awake at the time. As I mentioned, I'm in the UK, so Asia session is here overnight here. So price is continuing to push up. Let's see, can it break? Yeah, so we've now had an hourly change of character as well. So you can see very clearly higher time frames have started to shift back bullish here. If we jump over to the 4 hour, yeah, so you can see this is probably just going to be a retracement. Like I said, price has swept some daily liquidity, pushed higher and started to shift back bullish on lower time frames. So yeah, next trade idea, if we jump over to lower time frame. We have this area of demand. I would want a confirmation on this one though, because it still is kind of in a premium. So let's have a look. Yeah, so price just rallying from there. There was no confirmation. Let's see if we can get another pullback. All right, this would be the next POI. Again, very simply what I'm doing here is just following the structure. This was the most recent breaker structure. Notice as well that if we look to the left, price hasn't really tapped into anything significant. So likelihood here is we see continuations rather than a reversal. Right, so we've seen a 5-minute change of character here. In terms of entries, we could enter on a pullback into this area if price wants to retrace. So let's see if it wants to do that. Don't like how big the stop has to be on this one. I'm going to place stops just below this demand. Yeah, this isn't valid anymore because price broke the main high, which was this one right here. I would still use this area as a POI though. Price presents another confirmation. Yep, there we go. So price came into the POI. We've had a change of character. We've got an area of wrong tool. We've got an area of imbalanced demand here. So this becomes a valid entry. Let's set the limit here. Stops below the low on this one. And as always, mechanical 1 to 3 TP. Right, we're tagged in. Nice move so far. Price has broken the high again. Yeah, nice, there we go. So TP hit on that. Very clean trade. Again, one thing I want to emphasize here is the importance of considering momentum. So notice how much momentum price has, right? In scenarios like this, you're not expecting it. So for example, if we go back over to 4 hour, retrace all the way back down to this area, for example. I see a lot of people doing this and it causes them to miss a lot of trades. You have to consider the momentum. So if price is rallying like this, it's very unlikely you're going to pull all the way back down there. So you have to kind of adapt to that and consider more nearby areas instead. Next POI for me would be this hourly demand. Again, notice where price is retracing from. It's retracing before having swept any of these highs. So we can look for buys up into them. Let's see. No, price missed our POI. And yeah, price has now, if we zoom back out, this is all now internal price action. Price has broken the main high, which was this one. Right, so now we're looking for a retracement inside this bullish leg between the low and the high. So yeah, let's have a look if we can get another entry here on the buys. Price is still just parabolic at the moment, just pushing up with no real pullbacks. There's nothing really here I would look at the moment. Actually, so if you're looking at the structure, I would say this is the most recent breaker structure. One thing I am seeing, you can see we've got this hourly demand zone that price is just tapped into. Again, pay attention to the momentum. Look at how correctively price is pulling back. It's just kind of consolidating here. So the chances are, rather than this being a big retracement lower, it's probably just going to be a small pullback for price to come higher. And then it may do something like this later on where it comes back to collect that liquidity. But as of right now, you're just kind of expecting this to be a small pullback based on how kind of slowly and correctively it's moving down. It swept Asia low and also this low. So if we hop over to the M5, we can look for an entry here. Yep, there we go. So we've had change of character here. In terms of entries on this one, I'm happy to enter anywhere on this whole imbalance because the risk to reward is already worth it. And then going for a 1 to 3. Again, I didn't really explain the entry. The entry here is on this last bit of liquidity before the imbalance, rather than over refining it to the demand itself. Right, so we obviously could have got a more refined entry on that one, but that's fine. Let's see if this keeps pushing. Could probably get, if you missed the initial entry, could probably enter on this zone. Yeah, there you go. So both of those played out. This area just stood out to me. Very clear consolidation area that price impulsed out of. So a very clear demand zone. We've now had another break structure right here. So again, rinse and repeat in the same thing, just following the market structure and waiting for our confirmations. Let's see if price wants to retrace. Not really seeing a point of interest at the moment. Maybe this area. Again, very difficult situation to trade because price is just parabolic. We also have this 4-hour demand if price wants to come all the way back down there. But yeah, let's see how it reacts to this first one. Asia low taken out into it, which is an extra confluence. Yeah, we've had our change of character right there. Just mark this on as well. We've had a sweep of this liquidity. In terms of entries, I would enter again on the whole imbalance if price sweeps this low. And then going for a 1 to 3, which aligns nicely with this liquidity up here. Nope, no loss on that one. That's fine. It was a valid trade. Yeah, so that's slightly annoying. Price just wanted to sweep this bit of liquidity here. Still not seeing a clear POI here. See, a very difficult situation to trade here because price just keeps impulsing up with not really any clear areas. Right, so it seems like it's coming lower now. Let me just mark this on as a break structure. So we have kind of got, if we go over to 4-hour, based on how this is shaping up, I would now probably expect price to come towards these previous lows at the very least. If I just mark this on, this is kind of like the next liquidity area. There's not really anything in between that I would buy from either. So if this is taken out, we can look for buys. We also still have this area of demand just below. So let's see what happens here. Right, so that's been taken out. Let's have a look, M5. Right, so price is rallying here. Let's see, because we could also say here, keep in mind that price was trading at all-time highs, right? So we don't really know when price is going to reverse, and it has technically now kind of broken past all of these structure points. We have this area of supply, so if this area of supply holds, I would consider short in here, just based on how this is set up. Price has swept these previous highs into it. This kind of looks too obvious as a change of character for myself, so I'm going to see how this reacts and see if we can get some sells post Asia session. Yeah, there we go. So Asia session presented a change of character here. We have an area of imbalanced supply. So I'm going to enter on this and go for a 1 to 3. I might make the stop just a bit smaller on this one. And we'll place this order. Cool. Let's see if this pulls back for us. Still valid at the moment. Nope, so little loss on that one. Price is still within this area of supply though, so maybe this was just a sweep of Asia high. I would consider a re-entry here, as long as price maintains within this area of supply. So let's see if we get a change of character here. Yeah, there you go. So you can see price selling off. Let me just fast forward the Asian session. Yeah, so in terms of confirmations, this was the same as the M5 structure. I'm on the M30 here just because it's clearer to see. We have this area of imbalanced supply. So if price can pull back up into this area, I'm going to have a limit set. I'll put stops just above the high on this one, and we will go for a 1 to 3. You can also clearly see now as well that price has shifted back bearish. It's probably not going to be bullish here. So let's set this limit. This becomes invalid if this low breaks as well. Actually, I would consider selling from here as well. So it's pulled back, swept that last bit of liquidity. Let's see if we had M5 looks a bit messy here, so I'm going to leave this. Yeah, it looks like it's probably going without us. Nope, so we're tagged into this move now. Let's see if it can play out. It's a nice hourly supply as well, and we've now had some inducement swept into it. Notice how price is accumulating all of these lows below as well. That's a nice extra confluence. Nice, there we go. So TP hit on that one. Again, one of the things that I said at the beginning of this session was react to price, don't predict it. That's exactly what we did here. We reacted to the fact that price was holding this supply zone rather than predicting the buys when price was clearly showing sells. Right, so now we've seen this low taken out, right? Price has tapped into this 4-hour demand. This is where we could potentially see price shift back bullish. Again, we're aware of the fact that higher time frame or very high time frame is still bullish, right? It still hasn't broken any downtrend in structure. What's going to happen when price retraces on higher time frame is it's always going to break some of this market structure, right? Like this internal structure. So this doesn't necessarily mean price has shifted longer term bearish. It's just, could just be a retracement still, right? So price has tapped into this area of demand, right? Before entering this, I would want Asia low to go though. Just price is moving back very correctively here. So I want to see some more momentum, something more convincing. Yeah, something like that. So Asia low taken out. We're inside this area of demand. We've had this change of character. Price has created imbalance here. So once again, entering on the last bit of liquidity before the imbalance. I'm going to place stops just below that 4-hour demand. We will place this limit and let's see how it goes. Okay, no, so loss on that one, that's fine. Could potentially consider a re-entry here. Notice how price has swept the 4-hour demand low. One of the things that I personally do is I'll look at when these higher time frame supply and demand zones are swept, it makes price more likely to head over to the upside, right? So if we go back over to the M5, yeah, this is looking good. So you can see here, we had that shift bullish. We've got an area of imbalanced demand right here. Very nice trade this. So I'm going to wait for a retracement into this demand. This one, I'm not entering market execution just because the risk reward would be ruined if I did that. So I'm going to wait for a retracement into this. Right, price has tagged us in. It's holding so far. Let's see if it can keep pushing. Yeah, nice one. There we go. So TP hit on that. But yeah, nice one, guys. So I think this video is already getting quite long. So let's just do a quick overview of the statistics so far. Let me just find it. It was this one right here. So far we've done around, I think, 5 months of data. 68% win rate, so slightly higher than the 2024 win rate. 20 trades around about in 5 months, so around 4 trades per month. Again, this is one of the key things that I like to emphasize. More trades does not mean more money or more profit. It's much better sometimes to wait for the higher quality trades. Obviously, I also trade 3 other pairs as well. So 4 trades an entire month, 1 per week. across 4 pairs, it's going to work out to be around, you know, live it's around 2 to 3 trades per week that I usually take, and they're all high quality trades. I don't trade every single day. Average 3% wrist or 1 to 3 wrist reward, because we were using a mechanical 1 to 3 wrist reward. I won't go through all of this, but you guys can probably pause the screen here and go through some of these analytics if you want as well. But yeah, overall a solid session, guys. So I hope you all enjoyed this video. If you did, make sure to like and subscribe. And if you missed any of the previous parts to the gold backtesting session, I'll put the card up here for you guys to watch the previous part next. Thank you guys for watching, and I will see you in the next one.